Hi, Tim Smith of the Smith Group, #1 team for Coldwell Banker in California. If you're thinking buying, selling, or investing, please contact me. Welcome to the August update. Please click the link to follow. So let's talk real estate. We're gonna get right into the data because there's so much narrative right now. I wanna give you the data, I wanna give you the pulse, and then I wanna use my comparisons about what's happening here in Orange County. So right now, inventory has just hit almost 3,000 homes in Orange County, which is about 25% below the last 10-year trend, but it's definitely on the rise. 59% higher, right, than we've seen year over year. Sales volume is down about 50%. So we're seeing more inventory, we're seeing fewer deals. Days on market are double, going from 29 to about 63, 64, obviously different price points. So we're seeing lagging inventory. All that being said, we still don't have a lot of great inventory. I was at a swim meet talking to Bob. We're gonna use Bob as an example. And we were talking about how amazing this Orange County bubble is and how impenetrable the bubble is. What does the bubble represent? Safety, lifestyle, climate, the place you want to live, the place you want to have a second home. And I still get calls every day from people outside of the state, which is up dramatically. We have probably 3 times the out-of-state buyers that we've had over the last decade that have hit the market as a result of COVID and all the things that happened. Working from home is here to stay. Our climate is amazing. Safety is on the top of everybody's mind. Lifestyle is also on the top of everybody's mind. Peter Linneman, I'm a big fan. You guys probably know him. He looks at where we're at economically. GDP is up 3%, goods are down 1%, services down 1%. We are still in an environment where demand is outpacing supply, which means pricing goes up. Now, what I mean by that is for the right product. Now, I would say in this little bubble of Orange County, it's all the right product. And that's what I mean, it's impenetrable. It's not susceptible or vulnerable to the same type of ups and downs that we're gonna see other places, especially with this increased demand. Now, when you take it down even further, there's a big, let's call it, there's a real quandary that we're going through. And this is, if you're a buyer, and you've missed that new construction house, which new construction is in a league of its own. There's less new construction than we've ever seen, and the prices all are significantly higher than anything that we've seen in the past. So we're seeing fewer options because people are now faced with, if I buy this lot, whether it be in Dana Point, Newport Beach, Laguna Beach, Corona Del Mar, and then I go meet all these great builders here in Orange County and all these great architects, what we're seeing with inflation, with just the demand for these services, is the pricing for construction is up. The way we look at it, and we've done some significant analysis, is probably up about 65 to 72%, which lands right in the high 60s, higher than it was 3 years ago. Now people are saying, well, it's gonna come down. I'm just not subscribing to that belief because I just think there's too much demand and I just don't see that price going down. So what you're gonna have here is you're gonna have lots, construction price, you put those together, people are actually able to buy homes still below that replacement cost. So what do you do if you're a seller? Number 1, expect that it could take a little longer. Number 2, you need to have energy in pricing, right? You can't be 10% higher than the comps. When I look at the data, you can't show me any data in this impenetrable bubble where we're seeing prices lower than they were last month or last year or last quarter. All the data, even though it's less, is still higher than the last sales that we've seen, which is good for sellers. However, that doesn't mean you price your houses 10% above that. That's what's leading to price reductions, and price reductions lead to more price reductions. The third thing to do is it's time to update your home. I go meet with sellers all the time and we go through and we give them a price. Here's the price if you don't do anything. Here's the price if you stage, paint, redo your kitchens, redo your bathrooms, update your landscaping. significantly higher. The money that you will put in, I will show you every time you'll get 10 to 12 times more than you invest on that amount in actual net proceeds. It's time. And not only that, we'll go through this process so many times with these sellers. And you know, when you're considering it, and I'll put myself in the seller's shoe, when I start looking at my house, I think, okay, I need to totally update it. This is gonna be millions. What you can do for an insignificant amount, being paint, carpet, just small things, is amazing, and you will enjoy your asset back better. At the end of this process, which we have dozens of homes we're taking through this uplifting process right now, at the end of that process, every seller says the same thing. I should have done this years ago. And I think the challenge is if they did it, they would spend millions. We're talking about 50 grand. So that's what to do if you're sellers. And then find an agent that really has a marketing campaign to capture and find buyers outside this area. The buyers that will always pay you the lowest price are the ones that are totally familiar with all of the comps within your marketplace. It's almost as if they're allergic to paying the premium that the 51% of buyers out of state that are coming here looking for second homes, they're not familiar. They want a house. They're looking from Corona Del Mar to Dana Point. They didn't see every comp across the board. What they're seeing is what's available, what's sold recently, and this feels like a fit, right? So understand that dynamic. So find the agent that can actually create the best content, and not just marketing that brands the agent, but marketing that activates buyers that will come in here and that won't have that same framework, the narrow framework that I gotta buy this at $792 a foot because everything else is, that's irrelevant. Find buyers that aren't focused on that. If you're a buyer, now we're working with a lot of buyers, and the real challenge with the buying right now is you'll call me and say, I want to spend this amount of money, and then I'm going to show you, well, there's only 3 homes to look at, but there's some teardowns. So buying is still, although there's all this narrative of this market falling and blah, 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 all the economy that's happening, it is still very difficult for buyers to find good inventory. And when you're sitting on a house and you want to move up and you have a 30-year fixed mortgage at 2.5%, and you're facing a higher purchase price, which means a significantly higher loan amount, but instead of 2.5 to 3%, you're looking at 5.5 to 6%, that house has got to be awesome to make that jump. And that's one of the things that's constraining inventory. The great fixed rate mortgages that 75% of the people here in Orange County have are stopping them from making that big jump, because they're gonna have to up the loan amount and they're gonna be at double an interest rate. So that's constraining our middle road inventory even more. The other inventory we're not seeing, which we're not going to see, is the distressed inventory currently in coastal Orange County. The average homeowner has 50% equity in their home. So for that to dry up would be impossible. So overall, we are seeing a deceleration in appreciation. Prices have not gone down. As a buyer, do not get over fixated on the perfect price if it's a perfect house. The last 2 homes I bought, I paid list price. I would say do the same. If you love the home, don't lose it over $100,000 or $200,000 or whatever that looks like. Get the home that you want and understand the definition of a good deal is anything you bought 10 years ago, and take off your investment hat. It's not a cap rate. The thing that you should focus on is memories and utility value. So don't be myopic in your vision to try to get the best deal that you lose the house, because really there is very little inventory. When you look at our ultra luxury, when I say that, I would say 25 million up to whatever, we have the lowest inventory I've seen in my career. Fewer new construction homes because developers are scared or people are scared. And not only fewer homes, but fewer great lots. We're running out of coastline. And with, you know, half of the buyers we worked with last year being outside of California that are second homes, they want this beautiful inventory. So if you're a developer and you're scared because the numbers don't make sense. You have to look at a different way of evaluating it. Don't look at comps, look at demand, and look at replacement cost. I have a million examples of where this is where everybody thinks the comps are, but a new construction house comes up, it's 40 or 50% more, and it sells with multiple offers because that savvy buyer understands the process. If he were to build this house, he'd have to buy the lot, he'd have to look at prices way higher, and then he'd have to look at 2 to 4 years of his life. What's that worth to them? That's why they'll pay the premium. So developers, time to double down, take a risk, jump off the cliff, and do it because the market will support you. Orange County has become, and this is a 20-year prophecy, the greatest major metropolitan area to live. And where people of the past, my first 20 years in the business, people would come look at Orange County. I had to sell Orange County relative to Miami and Montecito and Santa Barbara and New York. And now everybody knows about Newport Beach and coastal Orange County. So focus on that. That will not change. End of summer swell. This is my prediction. Chris and I were trying to figure out waves break in half the depth. Waves are twice as big as, I'm messing this up, look it up. Waves break in half the depth they are. They're twice as big as half the depth. I was down at the Strand yesterday, or down at the Wedge yesterday doing a showing. Huge swell coming in. Waves, everybody's happy, beautiful day. There is an end of summer swell coming in. I'm already starting to see it. Buyers are tired of hearing about the news. They still need a place, and real estate, like it or not, is the best hedge for inflation, especially in an area with getting all this demand. So look for that end of summer swell, because inventory over the last 2 weeks, I've seen more deals go into escrow than the prior 16 weeks. If you're thinking of selling or buying or investing, please contact me. Follow our August update by clicking this link. Thanks, look forward to seeing you next month.